This
Hey there,
conference will
everyone.
now be recorded.
Hey there, everyone. I just wanted to go over a quick breakout trade from yesterday afternoon and show you how you can use volume at price to confirm the areas that you might like to take a breakout trade, either up the upside or downside. So I hope you find it helpful. And this is going to be on the NQ. And this was for yesterday, Tuesday, July 31st.
This conference will
So
now
this is
be
a
recorded.
5-minute chart, and it doesn't really matter what size chart you put your volume at price. Volume at price is what you see over here on the left that looks green and maroon color here. And what this is doing is this is showing the volume at each price level, as opposed to, when you have a volume indicator at the bottom of your screen here. And this is just my stochastic for confirmation when taking a slinky, so you don't even need to worry about that. So what we're looking for is we're looking for openings in the in between these volume areas. So if you look right here, I'm just going to put a line. You can see that we've got some high volume right here on that little area sticking out. So let me show you again. You can see it right here. So you can put a mark there. And you can see that's where the highest volume is, in this general area here. But you can see that the volume actually goes up to this area here. So I'm going to put another line there so you can see where I'm talking about. So that's right there around 47.50. And then you can see above it how we have this open space here between this 47.50 and this next volume node sticking out up here. So I'm going to just put a line up there. So in theory, if price breaks above this 47.50, it should be able to be sucked up to the next resistance area. Now, not to say that it might not get hung up on this little volume node sticking out, so let's just put a line there as well. So what do we have there? 53. So we've got 47.50. Let me just get rid of this 42. So we've got 47.50, 53, and 58. So what this is telling us is that if we get a breakout, in theory, if it breaks out above 47.50, it should be able to be sucked up to 58. Worst case, obviously you get stopped out. Second worst case is that you only get up to 53. So you can see that we've been consolidating here for a while. And I mentioned this in the room before we closed at 11:30, that if anybody was still trading in the afternoon, they might look for a breakout there. So I'm going to show you, rather than just putting a buy stop above that 47.50, I'm going to show you a way that generally I like to take breakouts. I'm not going to say that I never just put an order, above a high volume area expecting it to get to the next high volume area, but here's a little bit safer way, if you will. So here's that 47 area. You can see it right here. Here's my value on my line here. And so you can see 47.25, 47.50, whatever, close enough. So what I'll generally do is, because this has been consolidating in this area for a while, I'll let it try to break out. Like right here, it tries to get above that 47 and change, and it fails. So what I'll do is I'll draw a line above the failed bar, like that. So you can see I'm above this high right here. And then I'll look to get in above the bar that closes above this failed area, which would be right here. So you look to get in above that bar, and then, like we mentioned, looking at the 5-minute chart, we would be aware of that 53.50 area, which it has no issue getting through whatsoever. And then the next target area would be up there around that 57 and change. So you can see it trades up to that 57, and then we get a little bit of a pullback, and then it does continue obviously higher. So I'm not saying that you had to capture the whole entire move, but after you're in, once you take your first profit target off on a portion of your trade, you can trail using the regular super trend stop here, which is this yellow squares here, and use a few ticks below that. So this way, if it keeps going higher on a portion of your position that you're holding, then you can go ahead and trail it that way. So that was that 57.50 area would have been the ideal target based on our high volume starting here. Then if you look to the next area of high volume would be up there at 64. Now realistically, because of the volume up here between 58 and 64, you wouldn't have really expected it to bust through that 58 up to 64 so easily, but it did. And so like I said, if you were in the trade and trailing, then you definitely got more than you bargained for. So that's a way that I like to get in breakouts or breakdowns. If it's going to the downside, I always call them breakdowns. If it's going to the upside, I always call it breakouts. Some people call them all breakouts. It doesn't really matter. And so the reason I like to do that is if leading up to this point, price had been going sideways, continually holding 47 and change as resistance. So if traders keep shorting that area, where would they be putting their protective buy stop? They would be putting it above that area. So what I'll do is I'll let it try to get through, see if it's going to trigger a bunch of stops. And then once it pulls back, then like I said, I'll get in above the bar that failed. Because a lot of times if you put a standing order just above an area where you expect price to break out, so let's say that you put a standing order up here at 47.50, you get sucked into the trade and then it pulls back and it stops you out. So this is a way that you can get around that. Now I will point out that sometimes in an area where you're expecting a breakout, we won't get this failed attempt and it'll just take off higher or take off lower without a way to get in. If it does that, then you can look for a pullback. So if let's say that you missed the entry up here, you could have always taken a pullback up here around that 57.50. Okay, so I hope that helps. And if you have any questions, feel free to shoot me an email. Have a great day, you guys.